Hi, I'm Chuck Ackerman and this is Bill Kiefer, and here are the highlights of the 2011 Greater Cincinnati industrial real estate market. The Greater Cincinnati industrial real estate market is comprised of 258 million square feet. Now of that, the overall vacancy rate today sits at an even 9%. That number is slightly higher than 3 months ago when the second quarter vacancy rate ended at 8.8%. As far as net absorption goes, which represents the change in physically occupied space from one quarter to the next, the third quarter net absorption was a negative 400,000 square feet. This puts the year-to-date net absorption at a negative 1 million square feet approximately. Now these numbers are negative, but considering the overall market is 258 million square feet, this basically represents a stabilized market and is basically a wash. As far as the third quarter scoreboard of the submarkets go, markets that lost space were the airport submarket in northern Kentucky, which had a 650,000 square feet of negative absorption. Also losing occupancy was the Blue Ash submarket, which was a negative 250,000 square feet. The big winners of the third quarter of the submarkets were the Tri-County submarkets. The Tri-County submarket, which was 600,000 square feet of positive absorption. The Florence, Kentucky submarket also prospered to the tune of 250,000 square feet.
Chuck had mentioned that Tri-County was a big winner for positive absorption. Notable deals are swimwear.com released 390,000 square feet from Dividend Capital. Chuck and I represented HD Supply on a 160,000 square foot facility that Duke owned. John Gartner and Aaron Casey in our office represented AT Controls on a 122,000 square foot lease with Duke. And just recently we finished, the Colliers industrial team finished a 192,000 square foot lease with Philtech as the tenant and Reef Dexus as the landlord. If we jump across the river, CSN leased 150,000 square feet from Falcon. Pratt Display leased 166,000 square feet from Duke. Magnatech leased 64,000 square feet from Dividend Capital, and that's coming on the heels of the 198,000 square foot lease that Inotech did with Prologis. The rest of 2011 should finish strong. There's over 750,000 square foot of pending industrial sales that should take place by the end of the year. If the overall market continues to tighten in 2012 like it has in 2011, landlords and property owners should see an appreciation in rental rates and property values anywhere from 10 to up to 25% by the end of the year. However, there are two causes for concern. One is that there's several large blocks of industrial space that are coming on the market, totaling over 2 million square feet, adding to the vacancy. One is SEVA, over 400,000 square feet. Liz Claiborne, over 600,000 square feet. Avon, over 700,000 square feet. And Pella, door and window, over 200,000 square feet. The other concern is, are we heading for a double-dip recession? It feels eerily similar to the end of 2007, after we had a rash of deal volume of investment sales, industrial sales, and industrial leasing that came 2008, the pipeline for demand virtually shut off. This concern is weighing heavily on our colleagues, our competitors, and other industry experts that we already are feeling that pinch for a lack of industrial demand.
Stay tuned for our next update.